Moderna has suddenly become one of the most interesting and volatile biotech stocks in the market after its personalized melanoma cancer vaccine produced strong phase 3 results. The stock surged dramatically following the announcement, but then experienced a major pullback. The key question for investors is whether this decline represents the beginning of a larger crash or simply profit-taking after an extraordinary rally. My view is that mRNA has a potentially transformational long-term story, but the stock is now carrying significantly more expectations and risk. The primary catalyst was Moderna's personalized mRNA cancer vaccine, developed with Merck. The phase 3 melanoma study achieved its key objectives and showed a meaningful reduction in melanoma recurrence or metastasis compared with Keytruda alone. This result potentially transforms Moderna from a company heavily associated with COVID vaccines into a broader mRNA medicine and oncology company. The market immediately began pricing in the possibility that this technology could eventually generate billions of dollars in cancer-related revenue. The recent decline should be viewed in context. mRNA gained roughly 177% in a single trading session, reaching approximately $174.38 before experiencing a major pullback. When a stock rises almost 3 times in such a short period, massive profit-taking is normal. Therefore, I would describe the current move as an extreme post-breakout correction rather than automatically calling it a fundamental collapse. However, if the stock begins breaking important support levels while the detailed clinical data disappoint, then the correction could develop into a much deeper decline. The biggest weakness in Moderna's investment story remains its current financial performance. The company is still generating losses, while COVID-related revenue has declined significantly from pandemic-era levels. This means today's valuation cannot be justified by current earnings alone. Investors are effectively paying for Moderna's future pipeline, cancer opportunity, respiratory vaccines, cash position, and mRNA technology platform. Consequently, mRNA is a forward-looking, high-risk valuation story rather than a conventional earnings-based investment. Moderna's cash position provides an important financial cushion. The company expects to finish 2026 with billions of dollars in cash, giving it the ability to continue funding clinical trials, research, regulatory submissions, and manufacturing development. This reduces the immediate financial risk associated with its losses. However, investors should continue monitoring cash burn because a prolonged period of weak revenue combined with large research and development spending could eventually pressure the balance sheet. The personalized cancer vaccine is the most important part of the 2026-2027 investment thesis. The technology is designed to create an individualized vaccine based on mutations found in a patient's tumor. If the phase 3 results remain strong after the complete data are released and regulators approve the treatment, Moderna could potentially launch a major new oncology product around 2027. More importantly, melanoma could be only the first application, with additional studies potentially expanding the technology into other types of cancer. The real long-term opportunity is not just melanoma. Moderna and its partners are investigating personalized mRNA cancer vaccines across additional cancer types. If the technology demonstrates consistent efficacy across multiple cancers, the addressable market could become dramatically larger. In that scenario, investors could begin valuing Moderna as a major oncology platform rather than primarily as a declining COVID vaccine business. That is the key reason the long-term bull case is considerably larger than the current market opportunity. Moderna still has opportunities outside oncology. The company continues developing COVID products, influenza vaccines, and other respiratory programs. Its mRNA flu program could provide another commercial revenue stream as COVID sales normalize. The strategic goal is essentially to move from a COVID-heavy revenue model toward a diversified portfolio consisting of respiratory vaccines, cancer therapies, and other mRNA medicines. Analyst targets are currently difficult to interpret because many price targets were established before the dramatic melanoma announcement. Some analysts had targets well below the current share price, while others have started raising their estimates following the phase 3 results. Morgan Stanley, for example, recently raised its target to approximately $89. However, Older analyst targets should not automatically be treated as fair value because they may not incorporate the potential economic value of the successful cancer program. A new consensus is likely to develop as analysts receive and analyze the complete clinical data. The $135 to $140 region is an important near-term support zone. After the massive rally, investors will watch closely to see whether buyers step in around this level. If mRNA stabilizes here and begins forming higher lows, it could indicate that the market is absorbing the initial profit taking. A sustained breakdown below this area would increase the probability of a deeper retracement. The $120 to $125 area is the next major support zone in my framework. A decline into this region would represent a significant correction from the post-announcement highs, but it would not necessarily invalidate the long-term cancer thesis. If the fundamental story remains intact and the stock finds strong buying interest around this level, the risk-reward could become more attractive for long-term investors. The $100 level is an important psychological and technical threshold. If mRNA falls below $100, investors would likely begin questioning whether the post-phase 3 valuation became excessively optimistic. A move below $100 would not automatically mean the cancer program failed, but it would indicate that the market is significantly reducing the premium it assigned to the future oncology opportunity. On the upside, $150 is an important psychological level, while approximately $165 to $175 represents the major resistance zone created by the recent spike. If mRNA can reclaim $150 and then break above $175 with strong volume, the market could interpret that as confirmation that the post-cancer announcement uptrend is continuing. A decisive breakout above $175 could potentially open the door toward the $200 area. My bear case target for mRNA is approximately $55 to $75. This scenario could occur if the detailed phase 3 data are weaker than expected, regulatory approval takes longer than anticipated, manufacturing becomes challenging, or the commercial opportunity is smaller than investors currently expect. Continued weakness in COVID revenue combined with significant cash burn could also pressure the valuation. In this scenario, the market could conclude that the recent rally priced in too much future success. My base case 12 to 24-month valuation range is approximately $90 to $125. In this scenario, Moderna successfully advances the cancer vaccine toward commercialization, but the market gradually removes some of the speculative premium created by the enormous initial rally. Respiratory vaccine revenue stabilizes, cost controls improve the financial profile, and the oncology pipeline continues producing positive results. This would give Moderna meaningful long-term potential without requiring an extremely optimistic valuation. My bull case target is approximately $150 to $200. For this scenario to become realistic, Moderna would need to deliver strong detailed phase 3 data, make substantial regulatory progress, establish a clear path toward a 2027 commercial launch, and demonstrate that the personalized cancer vaccine technology can expand beyond melanoma. If these developments occur while cash burn continues declining, investors could justify a significantly higher valuation. The extreme bull case is approximately $225 to $275, but I consider this highly speculative. To reach this valuation, investors would need to believe that Moderna's cancer platform can become a major multi-billion-dollar franchise across several cancer indications. Successful melanoma commercialization combined with positive results in additional cancers and improving respiratory vaccine revenue could fundamentally change how Wall Street values the company. This scenario requires excellent execution and should not be treated as the most likely outcome. At the current elevated valuation, mRNA offers enormous upside, but also enormous downside. The bull thesis depends heavily on future clinical, regulatory, and commercial success, while the bear thesis is supported by Moderna's current losses and declining legacy vaccine revenue. This makes mRNA very different from a stable, profitable pharmaceutical company. Investors should therefore expect substantially higher volatility and should avoid assuming that a successful clinical result automatically guarantees long-term stock appreciation. My framework is bear at $55 to $75, base at $90 to $125, bull at $150 to $200, and extreme bull at $225 to $275. The most important support levels are approximately $135 to $140, $120 to $125, and $100, while the major resistance zone is approximately $165 to $175. These are my scenario estimates rather than guaranteed price targets, and they should change as Moderna releases additional clinical and financial information. My overall view is that mRNA is a high-risk, high-reward speculative opportunity, not a stock I would aggressively chase after a historic one-day rally. The cancer vaccine could potentially transform Moderna's business, but the stock price has already moved dramatically ahead of the company's current financial performance. Personally, I would prefer to see mRNA consolidate around the $120 to $140 area while the market receives more detailed clinical information. If the fundamentals continue improving and the stock successfully establishes support, the long-term risk-reward could become much more attractive.